So many people ask what are the differences between order flow and order block. So order flow is just an order block on a bigger time frame, right? So if you see, let's say you see the market going up like this, creating higher highs, higher lows, higher highs, higher lows, higher highs. So now in this scenario, this the whole of this zone, right? The whole of this zone starting from this high down to this low is what we refer to as order flow. So from this high here down to this low is our order flow. So if you move up to this zone here, it will be the very thing, right? From this zone to this zone, starting from here is our order flow. Now, when trading, whenever the market taps into your order flow, right, you are already expecting an up movement. After market taps into your order flow, you are already expecting a movement to the upside. Now, what are the differences between this order flow now and other blocks, right? Our order block will be our last down candle before this up move here. That is what we refer to as our order block. But at this zone now, this is the whole of this zone is an order flow. Now, now let's say you are on the 15 minutes time frame and this is your order flow. If you switch maybe to the 4 hours time frame, you'll see that this order flow on the 4 hours become an order block, right? So whenever the market taps into this your 4 hour into this your order block on the 4 hours time frame, you are looking to buy from it. That's because on a smaller time frame, you will be looking at it as if the market has not mitigated your point of interest or your order block, but truly the market has already mitigated that because on a smaller time frame, it's an order flow, but in a bigger time frame, it will be an order block. So, what do we need to take into consideration if you want to trade off an order flow instead of order block? Please turn down your volume. So, what do we need to take into consideration if we want to trade off an order flow instead of an order block, right? We need to have an inducement level. Our inducement level now will be our recent low, our recent pullback. So, this last pullback is known as inducement, right? So, once the market takes out this inducement and taps anywhere into your order flow, once the market does this, right, it taps anywhere into your order flow here, you can just wait for a change of characters and you buy, and your take profit is this zone. So so in many cases, I know in many cases, most of you or you have seen in the market that the market doesn't normally come down to your order block. It's because the market is reacting off an order flow. So once the market taps into your order flow, you need to be vigilant. You need to start concentrating on that recent pullback, right? You need to start looking at that recent pullback and look at the way price is behaving. If you see that price is giving you a change of characters to the upside, then you can take a risk for that trade to buy for that trade. So in if you invert this diagram, right? If you invert this diagram, we'll have almost the same thing, which is this, right? You see the market is pushing down. It's pushing down like this. We have order flow and another order flow here. Now, if we are supposed to map up our order flow here, right? This is our order flow. Starting from this lower low here to this lower high, it's our order flow. From this lower high here to this lower low, it's our order flow. So if we are looking for an entry, what we just normally need to do is wait for the market to take out our inducement, right? Which is our last pullback. So once this move takes out that inducement and taps anywhere into our order flow and gives us a confirmation, we will be ready to short the market starting off of that zone. Then we target our break of structure. So now, what are the disadvantages of using order flow instead of order blocks, right? if you are using order flows, you see that at most at times, right? If you want to play your stop loss to be safe, you see that it will reduce your risk to reward ratio. It will reduce your risk to reward ratio as yes, if as compared to if you were using an order block. Now, what is the advantage? What is the advantage of this over an order block? The advantage here is you have more trades, right? You not miss many trades because it's not every time the market runs into your order block. There's sometimes the market just reacts off of order flows and goes on. Some people that trade breakout blocks will even find this interesting because when once the market reacts off the order flow here from the tip of this order flow here, if you had something maybe or some sort of a breakout block, you will still be able to enter this trade, right? If you had a breakout block of this zone, you'll still be good to enter this trade. So this is an extra advantage. The only disadvantage is that your stop loss might be big, but if you concentrate very well on this leg of price and you see the change in character on this leg of price, right, you might be able to still minimize your stop loss and get something of this sort whenever price gives you that change of character, because the price will not just drop drastically here. Price will start giving you that change of character on this leg of price. Will start showing you that internal structure is switching from being bullish to being bearish. Those signs are always there. If you are smart enough or if you are keen enough with enough experience, you can always spot those things. So once you spot that, you have your entry, or you have your entry here, and you target this low here for the next break of structure. So any question? Any question? Okay. Okay. Let's quickly go into the chat here. Let me show you something, right? Now, if you look at this zone here, if you look at this zone here, you see that this black candle and this black candle and this red candle are almost the same. So this zone will qualify as our order block in this case. Do you have any questions from here? No, this red candle here and this black candle, the highs are the same. So you can use this other candle as your order block. Yes. Then this, yes, exactly. Now, this will be our order flow. You see the difference here, right? You see the difference here. This is we have a pullback here. Yes, we have a pullback here, and we also have an order block within that pullback. So now the whole of that pullback is now our order flow, and we now have our order block within it. So now you can see that the market did not quite pull down to this order block. The market reacted off this order flow and bought. Yes, the market did not push down. Yes, the market did not push down to this our order block. It just reacted from our order flow and bought. Now, if you look here, right? If you look here, this is what I just explained to you. Look at this here. You see, we have our inducement here. Let's shift it here. I think yes, this is where the value inducement should be. Sorry, I need to shift this. Moving these things like this. So this is where our value pullback is, right? This high is higher than this one. So this is where our pullback is. The low of the pullback should be here. So yes. So you can see that we have some sort of this type of liquidity, trend line liquidity here. So now once this market took out this our low, right? For the convenience of this video, we can still use this as our inducement, right? We can still use this as our inducement because there's no need. All of these things here were already mitigated. So once the market took out this low here, once the market took out this low here, the very thing was for the market to create a fake move to the upside. Then when it finally pushed down here, right? This fake move here, This fake move here, the only thing that will stop you from getting into this fake move is a change of characters. You see no change of characters here. Now, yeah. Okay. Now on this time frame, you cannot actually see the structure here, right? On this time frame, if you want to see this structure, you will need to switch. Let me switch into a smaller time frame as uh let's use we are on the 15 minutes, so let's use the 2 minutes. There's a lot of a proper time frame should be okay. You see here, right? Do you see any sort of change of characters on this zone? You see that the market just went up and tapped into this zone here, and it dropped off. Yeah, yes. But now, if you come over to this one now, if you come over here, right, you see that we have a change of characters on this zone. Look at it here, right? This is our minor pullback here. Sorry, this is our minor pullback here. The minor pullback got taken out, and price dropped back into this zone. Look at this other block here. On a 1 minute, the proper time frame to enter this trade is a 1 minute time frame. When it will be very high. So now you see that these things like this, when price gets to your point of interest, you need to be keen and wait for a pullback and wait for a change of characters. You see, when we are this one is a minor change of characters because this is a minor pullback here. You know why I say it's a minor pullback? If you look very well, there is even a pullback here. There is even a pullback here, which we are supposed to consider from here. Yes, that place is a second entry because I'm seeing a pullback right here. But this video like this, I'm going to upload it to YouTube. So it's those guys will not see it the way we are seeing it, right? So at first, right, this is where our first entry is even supposed to be from. This is where our first entry is even supposed to come from. This is our major pullback here on the 2 minutes. This one is a minor pullback. The reason why I say it's a minor pullback is because it occur between this zone, right? It occurred between this major pullback. So anything within this pullback here like this is called a minor pullback. But if you look very well here, you see that we already have our minor pullback. Yes, that's it. After this, I'm going to show you the difference as well between the differences between major and minor inducement as well. So that it's just the concept of this major and minor pullbacks. So if you see here, right? If you see here, this low here acted as our as our liquidity, and it's very close to our entry point. So when our liquidity is very close to our entry point like this, it's a bonus confirmation. Yes, it's a bonus confirmation. So you could buy off this zone, and you target. Where are you targeting? Right? You are targeting this all high. Yes. Now, why you are targeting this zone? This should not be your primary target, right? What you need to do is you can split this into numerous uh, targets. You put your first target here. Now, let me explain to you something. If you put your first target here, right, once the market hits this target here, what you need to do is Many people just say move your stop loss to break even. The market might still come back to this zone. Oh. The market might still come back to this zone and hit you out of break even. Normally, what I normally do at most at times is when the market reaches here, right? I take up, I take yes, I take off partials from the market. That partials now, I make sure that the partials are enough to cover my stop loss, so that if this trade comes back right and hits my stop loss, I will not move my stop loss to break even. I will make sure my stop loss remains here. But that partials I've made, that money, if I made $10, I make sure that my stop loss was $10, or my stop loss is $8. So that if the market comes back and hits that $9 and takes out that $9, I still have maybe $1 off from the partials I took off this zone. Many people exactly, exactly. So many people, yes, just at break even without a loss, but will be without moving my stop loss. Now, this method of risk management, it increases the way you trade. That means it increases your chances of the market not hitting you out at break even. Because there are times where the market will rally like this, it shoots back down just to clean off this liquidity or of these old highs and goes up. I've seen that happen many times. And when that happens, people cry. People cry a lot. People will cry a lot. So so I normally see people doing these mistakes, right? You do you know there are two types of change of characters? Okay. Okay, this is one type of change of characters I've shown you here. Let me show you. I will redemonstrate the two change of characters so that you can better understand the differences between the two types of change of characters. Now, let's say we have a market, right? The market is pushing up like this. It takes out our inducement, gives us a break of structure to the upside, right? Now, for there to be a change of characters, the market needs to break below our low here. Uh, I don't know. I don't know. Let me. Okay, okay. It was network. My network is really bad, and I was using Wi-Fi, but due to the fact that my Wi-Fi, the thing had a problem, so I'm using mobile data. It's disturbing a lot. Even yesterday like that, the thing just stopped abruptly, so I could not have that class. That's why I just told you that there was okay. Let's let's map this out. We have a boss here, right? This is a boss. We have an inducement here. We label it X. Oh, sorry. I made sure that this time around I bought equipment so that if light is disturbing, we'll not have any problem. I bought a new laptop. I bought some few things. I also bought a paid trading view plan. I can backtest. Yes, I can even use one. I can even use 1 second. Hmm. There's a lot I need to backtest as well. Okay, this is our change of characters here. Now, this is the first basic change of characters, right? Because this was our strong low here, but the market tapped into this low. The market tapped into this. The market broke through this our low. So this is our first change of character. This is the model of the first change of character. So you are looking for the inducement to be taken out, and you can start looking for a sell. So in this scenario, we have our last order flow here. That is our last order flow. If price reacts from that order flow and gives you any confirmation on this leg, you can sell. Same as you can also refine it to an order block. So this is the first model of change of characters. Now let's go to the second model. So let's say the market is going up like this, right? It creates a low like this. Okay, let's say the market is going up like this, right? At this level, this is our inducement. This is our inducement at this level. So so we map it out as our inducement. But if this market, if this map, this if this market happens to hit any POI at this level, right? Like it reacts off a POI to the left side and breaks below this zone. This is now a change of characters. Do you understand what I mean? Yes, you can ask. When the market is going up, when the market taps into their point of interest, right? If it taps this is only with the exception that the market taps into the point of interest. The first pullback is a change. The first pullback that the market breaks through is a change of character. Yes. There is one see right. Let me expand this. Let me expand this a little so that we can really let me reanimate that. You look at this, right? You look at this here. Where is our last strong structure? Our last strong low here. In this case, it's definitely okay. Okay, once it moves, you let me know. Okay, now this is our strong low here. Sorry, I keep forgetting to. This is our strong low here, right? Now, if you can see, this is where our last break of structure is. So at this point, when the market was here, we were anticipating that this is our inducement at this level. But the inducement never got taken out. Another inducement was created. Now, since the market has tapped into this point of interest, this pullback here now becomes our valid change of characters. So yes, this is a change of characters here. It no longer becomes inducement. So this is only possible if the market taps into a point of interest. It's only possible when the market taps into a point of interest. Or if not, if the market did not tap into a point of interest, this will be where we'll be anticipating that our change of character should occur from. So if you look now between these two models here, if you look here between these two models, you see that this one is different from this one. This one requires a valid strong low to be broken, but this one just requires the first pullback to be broken. If we are bullish and the market takes out a strong zone, right? Then we have super structure. Yes, like this first diagram here. The first pullback. Yes, yes, exactly. Then there was one of these things I also wanted to show you. which that thing almost dealt with me on Friday, right? You saw how I sent the setup and I later changed the bias. Let's say let's say the market is pushing down like this, right? If the market is pushing down like this, the market creates a break of structure. Now the market is returning back to that zone. It's returning back to your zone here, something of this sort. If you are trading internal structure like what I was doing on Friday, what I was doing on Friday is I was waiting for this internal structure to break, then I can have a buy trade from this zone and all the like. Because normally on Fridays we have normal breaks of on Friday, right? Fridays are normally for reversals. Yes, that's what I wanted to say. I'm thinking, I'm doing, yeah, multitasking is really hard there. On Fridays, if let's say you were trading, you were following the trend on Monday, Tuesday, Wednesday, on Friday there's a high probability that that trend was that internal structure, right? That if you trade internal structure, it will most likely hold. So now on Friday, what I was doing is I was buying off this zone. I first did analysis, right? The first thing I saw in my mind was this zone. I first sold off this. I first gave a sell signal of this zone. Now we had a change of characters here, quite all right. But can you tell me one thing that we lacked for this sell setup to work? Yes, because I first considered selling off this zone. I gave this setup here for this for the guys to sell. Then I realized there was something wrong with the setup. Please look at it. Yes, yes, this is a sketch. You can see it, right? Yes, I was saying that on Friday I was buying off these zones on Friday when the market was pulling up to this POI. I was buying. Now, when the market got to this POI, I gave a signal for the guys in the Telegram group to sell. I later changed that setup from a sell to a buy. Can you tell me what is lacking on this setup for it not to be a sell? Exactly. Exactly. You see, even when this price gave us, even when this price took out this low here, giving us a value change of characters after tapping into our point of interest, after tapping into our point of interest, right? There was no inducement of this zone. So without this inducement of this zone, the other block that you're looking at here will become inducement. So when I gave this signal, I was anticipating that price will reverse. But now, when I later discovered that there was no inducement of this zone, now I gave another signal, which was just this. Sorry about that. That's the wrong. I gave this guy this signal like this, and this signal like this, it hit TP, right. The signal was on this pair we are on here. This- It was Friday and things were really, then news came and also moved the pair really to the opposite direction. This was the zone. If you look very well here, see that this was a zone. This was a zone here that I asked these guys on, was it on Friday? It was on Friday, right? Yeah. This was the zone I asked them to buy off of. This zone like this. They were buying off this zone. When they bought off on a smaller time frame, right? Targeted this high. Once this high got taken out here, yes. Once this high got taken out, because I was first anticipating a sell here. I was first anticipating a sell after price swept this high, but when I look at it and I look at the way price was forming up here, I did not like it. I did not like it. We had inducement here, and we had a liquidity above these zones. So I changed that bias and gave those guys a very short setup. I think that setup should be in the Telegram group. Let me just quickly check. This recording will not show the Telegram group because I did not give permission for it to show. Oh, you cannot also see the Telegram group. But the setup is in the Telegram groups anyway. Yeah, yes, you look at it, then you will know what I'm talking about. So I think that's all. Do we okay, let me check. USD CHF. Which time frame? Okay. Uh the network is very slow. Okay. This is the 4 hours time frame. It's very slow. Yeah, just from looking at this, you already know that the market is bullish. That's one of the things you need to first look at, right? Just glancing over this, you already see that the market is bullish. So first, where was our last break of structure here? You see that we have a sweep of this low. You have a sweep of this low, which is our inducement. That low was swept, right? And we have our break of structure here. There's nothing much about this. There's nothing much about this again. So after inducement, this structure. Wait, let me finish. After this, that is our break of structure, right? Our inducement in this case is this zone here, right? So after our inducement, if you can find another block below this zone, you can have a trade from it. If you can find an unmitigated other block below this zone, I don't know. This is not my primary chart. This is not the primary broker that I'm using. This one is mainly for backtesting, so I cannot really see well. But if you see another block below this your inducement, you can once price takes out this inducement, you can be ready to take your trade. Now, from here now, the next other block you consider now should be this one here. This is your extreme order block. Once the first order block below your inducement is the if it's unmitigated is your decisional POI. No other block apart from that will matter again until the last order block. So all if you have another block here, it's an SMT. If you see another other block here, it's SMT. If you see another one here, SMT. So you can ask your question now. Yeah, I'm listening. Yeah, this zone on the 15 minutes is a strong zone, right? This zone where you are in on a is the 4 hours time frame. Well, for this, there's what we call a fractal. Price is fractal, right? You might be buying on a smaller time frame, somebody is selling on the bigger time frame. So it all matters the way you look at the market. Look at the market, and it also matters from your back testing to see which one normally works on it. Now, if let's say you look at this 15 minutes, you see that this 15-minute structure mostly has been holding for the past zones for the past, right? Then there's no need for you to be waiting for that 4 hours time frame. But when you are smaller time frame and aligns with your bigger time frame, it gives you a higher probability. Now, let's go back to the 4 hours. Let me show you something. Now, on the 4 hours here, right? On the 4 hours here, nothing stops this price from creating another inducement here. You know that, right? Nothing stops price from just creating another inducement here. You know that nothing stops price from just creating another inducement here like this. Now, this inducement here on the 4 hours, you will see it on the 15 minutes as a whole break of structure here and all the like. But nothing stops this price from breaking it. So if price reaches here and you see that it reacts from your 15 minutes and gives you a good confirmation, you can take the risk here for the buy following this internal structure here. There's no need for you to, yes, there's no need for you to follow this zone here. You follow this internal structure at that time in this case. But you should still have in mind that this zone is likely to be my 4 hours inducement. So you need to be careful. The market might see reach here and just sweep that POI on a 15 minutes, right? On the 15 minutes, you might be looking as if, oh, the market just try to liquidate me. The market is actually trying to take off this liquidity that has been under this low, but it will sweep that low, but it doesn't mean that your POI on the 15 minutes has failed. You know that once the market sweeps a POI, the POI has not actually failed, right? Bigger time frame picture. Now, first of all, what you need to know is this zone here is a decisional POI. It already has a low probability of working out. Yes, this zone has just a 50-50 probability of working out. So if this zone like this has a 50-50 probability of working out and you have 15 minutes and you see that your 15 minutes is strongly bearish, then that that might be a sign for you to consider that the market now is going for a more deeper pullback. Yes, because from here, right? From here, the only thing you might be seeing here is inducement, but I see a lot of things here. Let me just show you one of the things which I'm seeing there. Now, now, now you start seeing all of these things now when you start going into the market deeply. You start seeing this thing. So once this low breaks, right? Once this low breaks here, you start considering that this market is coming in for a much larger pullback, for a much bigger pullback, a deeper retracement. So price is fractal and we are dealing with probabilities here. There's nothing that is very certain in the market. We deal with probabilities. If you manage your risks well and deal with your probability well and your strategy has an edge, at the end of the day, you come up with a win, something from the market. Now, the reason why many people don't make it in the market is because they're thinking that their trading career will be determined by 50 trades or 10 trades or 2 trades. You need at least for an information system to actually for you to calculate the accuracy of an information system, right? You need to take data inputs from several sources and compare the probability of the output being positive. So if you take 4 trades, you take 5 trades, you compare those things, it will not give you anything. It will not give you anything reasonable for you to actually say that no, this system like this is actually working. This system is actually working, or this system is not working, because that data is very small. You need to take at least 100 100 trades. Now you start calculating, right? If you see that, okay, if you see that, okay, there's no problem if you don't win most of the time. If you have a 35% win rate, right? If you have a 35% win rate and you discover that, okay, this is what I have, this is what I've been managing, this is what I've been constantly achieving for the past 3 months with a result of maybe 300 trades, 200 trades. What I can start doing now is I can start working on my risk to reward risk to reward, right? I make sure that 35% of the trades that I win, I make sure that they cover up the losses of the remaining 70, or is it 65? So the remaining 65, right? You make sure that your risk to reward is at least 1:3. So that one part of it will be covering up the losses of for your remaining 65, and one part will be making you at least, even if it's a point 0.5 reward, that's not bad. Because at the end of the year, right? At the end of the year, you look at your results, not in how many trades you have won. You look at your results in how your risk to reward played out and how many trades you have won. Then you calculate, if you calculate how many trades you have placed and calculate your average risk to reward, calculate how many trades you have lost, calculate how many trades you have won. You'll see if you are actually profitable or not. And these things will come from discipline. It will come from discipline. So I think that will be all for the class for today, right? I have another class with my newbies. Okay, I'll upload this on YouTube. So those who will be watching on YouTube, make sure that you subscribe. And yeah, you can always go back and rewatch it if